Solar energy stocks went absolutely crazy this week, and the biggest reason is that Enphase Energy reported their fourth quarter 2023 earnings, and investors at least liked what they heard. And this was really a recovery driven more by the fact that we think we're near the bottom for the residential solar market rather than bullishness on operations in the next couple of quarters. So I want to put some of this performance into context and talk a little bit about what to think about solar energy stocks going forward, because I think this is an industry that long term has a lot of tailwinds behind it, but the next couple of years look much more uncertain than a lot of people might think, especially given the fact that stocks have risen so quickly over the past week. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, including coverage of the solar industry. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's just look at the chart for some of the biggest companies in residential solar. This is the 1 week performance, just a week, of Enphase Energy, Solar Edge, SunPower, Sunrun, and Sunnova. So the top 2 companies there are component suppliers to the industry, module level power electronics, batteries, components like that. And then the next 3 are all actually installers of solar energy projects. So you see a recovery across the board, but some companies are bouncing more than others. Enphase in particular was up almost 20% on the day that they announced earnings. Solar Edge has followed, and then Sunnova is actually one of the companies taking market share in residential solar, so it makes sense that they're maybe getting a little bit more of this hype bounce than some of the other installers. But let's go to some of the numbers, because I think putting this into context, what actually was reported is really important, because not all of these companies are going to be operating in the same way in the future, despite the fact that their stocks are all up this week. Now, I did a full video breaking down Enphase's results, but I want to show just how quickly the business is deteriorating and what is actually expected, what management really gave numbers behind. So you can see that for the fourth quarter, $303 million in revenue, down from $725 million a year ago. Put that into context. That's more than a 50% decline in revenue. And I've been saying this for a while on this channel, things are going to get worse before they get better. $260 million in revenue to $300 million in revenue in the first quarter. So the declines that we're seeing in the industry are going to continue at least through the first half of 2024. The good news for Enphase, and this is where I think they really differentiate themselves from a company like Solar Edge, is you have very high margins, still in excess of 40%, even if you pull out the IRA benefit. So that's phenomenal. So that's a phenomenal sign for Enphase Energy. But there's a few trends that we really need to think about and how they're going to impact the solar industry and all these different companies a little bit differently. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, one of the things that's been really positive with Enphase is they cut their costs much quicker than I think a lot of investors thought they could. They do have a relatively low overhead business, so they were running at about $100 million in operating expenses per quarter, and they were able to drop that by 20 or 30%, I think is their estimate going forward. But the other thing that they did that wasn't getting a lot of attention this week was they reduced their capacity. So they had about 10 million units of capacity for microinverters, and they said they cut that capacity by rationalizing some of their manufacturing, the third-party manufacturing, into fewer plants, and now they have about 7 million units of capacity. So what they're telling you there is the growth rate that they previously expected is going to be slower. Yes, some parts of the market may recover, but the highs are not going to be as high as we previously thought. So we need to lower those long-term expectations. The other thing is that we're going to see a shift from high-value microinverters to more batteries. And this is something that we're seeing across the board, but particularly in Europe and California. These are the 2 places where there's been some policy changes that have really impacted the residential solar industry. And that's one of the reasons that there's so much of a shakeout right now, particularly in California, which in the US, I'm able to follow a little bit more closely. But the change to net metering 3.0 really pushed customers towards including batteries with their solar energy systems. Selling electricity to the grid was just not as profitable. So you got to store that energy that you're creating during the day, using it at night, offsetting purchases that you may have made previously. So there's a number of different changes that happened with net metering 3.0, but just basically made it less economical to put solar on your roof on an overall basis, but more economical to put solar plus storage than it previously was. So that increases the demand for storage, but lowers the overall market for solar. So those two things sort of offset if you are a company like Enphase and you're selling microinverters and batteries. The bad news is batteries are not as high margin as microinverters have typically been. So your revenue may not suffer quite as much long term as you may have previously thought, but margins probably will. I don't think we're going to see Enphase be able to sell a battery for a 45% gross margin. That's going to be more like a 10, 15% gross margin, especially because they're outsourcing the manufacturing a lot of those batteries and the cells to third parties, which is what all of these companies do. So now let's get to the installers. And this is where we don't have results yet, but we'll start getting them over the next couple of weeks. According to Enphase Energy, what the installers saw was a sharp decline in installations in California, particularly for retrofits or putting solar on your roof after the house is built. New builds are still doing very well because that's mandated in a lot of places. But the rest of the US was relatively flat. So that means that companies that are more concentrated in California are probably going to be hit harder short term, but we are starting to see a recovery. So fourth quarter numbers for SunPower, Sunrun, Sunnova could be pretty weak based on that poor performance in California. The companies that have a little bit more exposure to the rest of the country are going to be a little bit buffered by that. Now, all of these companies have diversified their operations over the past few years, but we'll see exactly how that plays out and who's generating better margins or worse margins and where the trajectory is going. The second thing to look at is bookings because all the indications are that bookings are starting to pick up, particularly in California. So if the rest of the country is essentially flat, and that's what we can expect going into 2024, maybe even pick up a little bit with some of these subsidies and things like that, rising energy prices. But California is going to be the wild card. How quickly are bookings going to pick up in California? And you're going to see that in Q4 in the booking number, but you're not going to see that revenue hit until at least first quarter, if not second or third quarter of 2024. We've still seen that a lot of companies are still installing net metering 2.0 projects that would have been signed in the spring of 2023. So there's a lag here between when policy changes are made and when it actually affects their businesses. But all of these companies on their third quarter 2023 call talked about how bookings were starting to pick up towards the end of the quarter. Was there still momentum through the fourth quarter into these winter months? That's what I'm going to be looking most closely at because that's going to give you an indication of when there's going to be a recovery in installations and what the magnitude of that recovery is going to be. That's, I think, the biggest question I have coming out of Enphase's result is the magnitude of the recovery going to be lower than it was previously? Because that would be a negative overall. It would mean a lot of these companies are going to have to institute a lot of cost cuts. But generally, based on Enphase's comments, I would expect a lot of these installers to be relatively bullish on results going into the second and third quarter of 2024. Growth in the rest of the US, and then growth picking up at least versus lows in the third and fourth quarter of 2023. So those comps get a little bit easier in the back half of the year. Margins are a different question. Are they able to put pressure on some of their suppliers to cut costs? Were they able to lock in some lower rates as interest rates came down in the late 2023? These are all questions to be answered. I tend to think that the installers are going to be in a little better shape than the market is thinking. I know that investors have poured back into Enphase and are very interested in SolarEdge, but I think the recovery is going to happen with those installers first. So keep an eye on that. This recovery is going to be a lot bumpier than I think a lot of investors expected. Enphase's results show that. Probably not going to see growth for them until the third quarter of 2024. And even when we do, I'm not sure we're going to get back to their peak levels for at least a few years. But what do you think about the solar industry right now? Which stock is your favorite? This is something I'm interested in hearing about. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.